By far, the number one question I get asked most often by clients and referral partners is, hey, where are things going economically speaking? And though I always advise people to take whatever I say with a grain of salt because nobody really has the answers here, it doesn't stop me from having some pretty strong opinions on it. So get your salt ready because here they are. You know the story. Over the last 3.5 years, we've seen a ton. We've seen pandemic, we've seen ultra low interest rates triggering a housing boom, we've seen inflation skyrocketing and interest rate hiking cycles to match that as the most aggressive we've seen in more than a generation. And finally, I think we're at the end now where we can confidently say rates have peaked. The next Bank of Canada meeting comes on December 6th, and the overwhelming odds are for a pause and probably start to see some softening of language. As the governor of the Bank of Canada, Tiff Macklem, said last week, rates are probably sufficiently high. Again, nobody really knows, but that's the overwhelming expectation. If you want to know where fixed interest rates are heading, watch bond yields. And those bond yields have done an about face. Over the last 2 months, they've dropped by 0.75%. That will lead to some downward pressure and drops in fixed rates. We have seen that to some extent, but not nearly matching the drop in bond yield. So I think we can expect some downward pressure. As confidence grows that the next move is going to be a rate cut, we can watch for those rates to drop further, especially as we head into the spring, which is normally cyclically a busy time for housing. So post-New Year, reset, rate drops, a little bit more enthusiasm, spring market, you know where I'm heading with this. There is a well-defined relationship with housing demand and prices and interest rates. So as interest rates rise, housing demand drops. As interest rates fall, we can expect to see the opposite. And add in that we've seen a massive amount of population growth, yet real estate activity has declined. You can infer from that there's probably 12 to 18 months of pent-up demand that's waiting to burst through here. So as we go forward, as we see interest rates start to decline, as confidence grows, we can expect to see real estate activity picking up. And I put together an interesting graph with the help of Helen here that I'll post along with it that really displays and sort of articulates that relationship. I think it's impactful. So if you're in that position where you've been thinking about, a lot of people have been stressed out, squeezed out of the market with higher interest rates, they're not really sure where things are going to go, now is the time where I think you want to get pre-approved. It's the time where you want to get your questions answered, know your numbers, because things will change and they will change quickly. And with that, I think we can expect to see an uptick in activity. So if that's something that's on your radar, reach out. We'd be happy to connect and get you squared away from that, because I think the spring has the potential to be pretty active in the grand scheme of things here. But any questions, please feel free to reach out.